Good morning, it's John McLaughlin. It's 6 a.m. in the morning. It's the 20th of December 2023, and we're here with another Crossfire strategy trading session. And we're currently trading the Euro odd, Euro NZD, GBP odd, and GBP NZD. Right, so right now we're on the 15-minute time frame on Euro odd. What we'll do, I'll just put the trend lines on to show you what I'm going to do. So first of all, what I'm going to do is take off our straightforward indicator and the clouds just to clear up, or just to make the charts nice and clean so you can see them. So first thing I do, I like to put a vertical line on there. Okay, just lock it off, get a couple of trend lines, and what I'll do, I'll put them on in readiness for 6:15, and then 6:15 we can place these trend lines on the chart and we can see where we go from there. Alright, so as we can see straight away, we've got some high impact news coming up at 7 o'clock. Looks like the Euro, so we'll put these trend lines on and then we'll go and check the news. Our next one, Euro NZD. So you can see how noisy it is when you've got the indicator on. So again, just taking these off makes it really nice and clean. Okay, so 6 o'clock. Oh, 6 o'clock in the morning, what a wonderful time to be awake. I've got the coffee at the ready, so that's the main thing. Alright, GBP USD. No, GBP odd. We'll take that off. And you don't need the vertical line, okay? But I just like to put it on. I'm quite a visual person, so I like lots of visual cues. GBP NZD. What are we doing? Oh yeah, taking off. I'll take the clouds off as well. It makes it even more cleaner. Or just even cleaner would be slightly more correct. The one thing you'll find with this sort of strategy, I got some more news coming up, 7 o'clock, is, in fact, let's go look at the news now. You just want to, be nice and monotonous when it comes to doing this strategy. Same thing every day, just repetition, getting better at what you do. Alright, so let's have a look at, I like my FX book. So Euro, we've got high impact news in 55 minutes and medium and low, so that's going to affect the price. We've got high impact news for the pound at 7 o'clock, so an hour away, so that's going to be interesting. And then 8 o'clock we've got a Euro. Sorry, it really is 6 o'clock in the morning, by the way. So Euro news, yeah. So we've got all sorts of high impact news affecting this. It's going to be affecting this session, so it's going to be interesting. And what do we do when we've got high impact news? Well, we just look at the charts and we assess, and we just keep our distance. So let's go and have a look for imbalance. Okay, so as I said, with imbalance, we'll start from here. Say imbalance, we're looking at coverage from the first and the third candle. So if you look at this one, this is the main candle, this is the first candle, it doesn't cover it, and there's a gap between the first one and the third, okay, from there to there. So that means there's imbalance. An imbalance just means that at some point the price has to mitigate that, has to take out that imbalance, but we don't know when. It could be any time, it could be weeks away, okay, but again, it gives us a bit of a visual for areas of where price may want to go. Okay, so that's the imbalance there. A little bit of imbalance, we have imbalance here, a tiny bit. It's a tiny bit, it's not much, but it's just a tiny, crikey, it is a tiny bit. I mean, sometimes imbalance can be like just a line, but it's still imbalance. Okay. Apologies for the yawning. I haven't actually slurped my first coffee yet, so I'll get these on first. Okay, so we've got imbalance here. So imbalance just below the pivot line. There we are. And as I always say, it's did that give me an eye? Yeah. It's always, you can get indicators that highlight imbalance for you, so it can change the colour of your candle. But you know, learn to do it for yourself. Okay, just learn to do as much as you can without relying on indicators. Okay, because it will make you a better trader. We can go back. What I do as well is, you can see up here, there's imbalance up here, and if it's still relevant and it's still active, which this is that still active? It looks like it's been taken out from this previous area, but it looks like we've got imbalance here as well. So let's have a look up here. We've got imbalance here. Look. So that previous area of imbalance would have been taken out, but it's formed new imbalance, which was this one here. So I like to put more in line just to make it a bit easier on the eye. Right, okay, that's the imbalance for Euro odd. So Euro NZD, what have we got going on there? Okay, so straight away you can see there's okay, so that's previous imbalance, but as I said, it's formed new imbalance here. If I was to just checking the time, 6:09. So at 6:15 we can go and place these trend lines on. Imbalance here. Okay, let me just put this a little bit further nearer to where we're trading. There we go. So 15-minute time frame. Big lots of imbalance. I'm there. I click cancel, and again a little bit more. Let me just tidy that up a little bit. So a bit more yet. So it's always good to put those significant areas on your chart, because you can tell, or it'll give you some idea of where price may want to go to, and then sometimes you'll be looking at the charts. Excuse me. You'll be looking at the charts, and you'll think, well, why is price stuck at a certain point? and then when you look left, you realise it's a significant area from before. It's a previous high or a previous low, or you've got imbalance or whatever. So I always like to put imbalance on. And the thing is with trading, everyone's got their own way, okay? And there are so many different strategies because everyone's got their own way, okay, or their own kind of way of doing things. And you know, what you never want to do is think that one strategy is better than the next. Okay, find your way, find what resonates with you, find a strategy that fits with your lifestyle. That's the main thing. Okay, and then practice it. Get the bug of practice as much as you can. Okay, but never do what a lot of new traders do, which is they look at their strategy and they convince themselves that somebody else's strategy is more effective. So you've always got, you know, there we go, 1 or 2 feet where you're thinking, well, you know, maybe this is okay, but you know, somebody else is doing better than me. Okay, so common these days in life where everyone thinks everybody else is doing better than them, and it's just perceptions and crikey illusions. That's what people want you to think. People want you to think that they're doing better than them. Alright, social media is responsible for all sorts of things. Alright, just when you find yourself winning trades, and when you find yourself becoming comfortable with what you do and how you feel about certain things, and if you feel good, you're on your way. But if you're constantly thinking somebody else is doing better than you, then you're going to switch from strategy to different strategy, and you'll never gain any actual momentum in your trading, because really trading is all about 613. Trading's all about momentum and boring repetition. That's really it. Alright, if somebody tells you that, you know, get in trading because it's really exciting, and you're talking to a marketer, not a trader, because trading should not be exciting. Don't get me wrong, it can be exciting, and it is, he says, contradicting himself, but it should be logical. Okay, that's it. Okay, that's plenty of imbalance. Then there's a bit more imbalance on here. I will put that on. We'll put it on because sometimes you just never know. Price might want to go ballistic. And we'll take away these areas of interest and we'll put them on as we need them on the session. Again, just another opportunity to try and keep the chart as clean as possible. Alright, so GBP NZD, this is the last one we've got. So again, putting the imbalance on. We'll get this done fairly quick. Right, little cluster of imbalance on there, look. I won't even bother putting it on because we know it's imbalance. I'll say normally I like to put the text on, but when it's this close, it's gonna have imbalance everywhere. So we'll just leave that off for now. We don't have to put it on the wall. Alright, what else have we got? Oh, right, we better get our trend lines on. 616. Okay, so all we're looking for is the higher high next to this candle here. This is our 6:15 or our 6 o'clock candle. So if we put our crosshairs on the higher high, this candle here. So we'll grab this. We'll put our magnet tool on. Let it stick to it, and we'll pull this down to the top of the wick. There we go. The lower low is this green candle here. Green candle there, and then we'll put the trend line on the bottom of that wick as well. Okay, there's a cross. Okay, let's extend this a bit more. There we go, good. Okay, indicators back on, 2-minute time frame, and we are good to go. Right, euro odd. Okay, the higher high for this candle is, yeah, this red one up here. Magnet tool on, onto the top of the candle, and then down onto the top of that wick. There we go. The lower low is the one, the candle straight next to it. This one here, from this candle. I'll extend it out a little bit. There we go. And then bottom of that candle. That's that. Indicators back on, and on the 2-minute time frame. There we go. Okay, GBP odd. So top of the candle is this red candle as the previous. Magnet tool on. And if you don't put your candle tool on, you can just spend more time than you need trying to get it accurate. Oh, it just snaps to it. I like that. Okay, so there's no wick on this candle, so we put it through the center of the body, or as near as we can. Okay, there we go. Right, so on the 2-minute time frame, indicator on, and away we go. And GBP NZD's done, so euro odd is done. Yeah, so euro NZD. Magnet tool on. Top of the candle is this wick here. Or should we say the higher high rather. Top of the wick is there. The lower low is the one straight next to it. And the top of the wick, or the bottom of the wick rather, is there. Okay. So 2-minute time frame, and we want to be putting our indicators back on. There we go. Okay. So in principle, what we're looking at doing, we're looking to take buys when the price goes above the green trend line, and we're looking to take sells when the price goes below the red trend line. Okay. And obviously there are lots of other factors to take into consideration. What I always tend to do, because I'm visual, I like to put a little line where it says where we've got the high impact news. Okay, so again, just checking the news again. And you can also check Forex Factory as well. And as I always say, Forex Factory, it's just a double confirmation, but the news on Forex Factory is nowhere near as nice or as good as my FX book. This is what we've got, look. Euro, GBP and GBP. Okay, so there's not as much information on this one as there is. Okay. So currently nothing happening. Price is down here. If we're looking to see price break out, okay, then we can assess it again from there. Look at the pippage from where currently price is now to this pivot. Okay, 6 pips, then down to these lower lows areas. Okay, these areas here, 12 pips. Okay, so again, we'll just wait. Euro NZD currently in this area we call no man's land. Okay, so nothing really happening right now. GBP AUD, yeah, it's coming. It's trying to make its way out the trend line. Okay, and as you can see, if price comes down even further from there, then this piece, the parabolic stop and reverse, will flip and it will go above and it will change colour to red. Okay, but if you look at it overall, okay, overall, look at this since 1 o'clock this morning, the price has come all the way down. Okay, so some interesting moves at 1 o'clock, which is the Asian session. GPNZD, again no man's land in this area where you've got the wedge, okay, before the crossover, and in this area, and you never want to be taking a trade anywhere near this area. And what we'll sometimes find as well, because we've got high impact news at 7 o'clock, you may end up the price may end up consolidating all the way to the news with the occasional fake out, okay, to try and get people to place orders until the news comes in, and then it can move sharply in the direction, okay, and get lots of volatility. So there we go. Look, we've got price is starting to move out away from the green, the red trend line, okay, and we've also got a little bit of air as well. So when I say air, we've got a small gap in between here. So this is kind of interesting. But we're looking at a fake out. So even if price comes down, you go, well, what's the move to the next significant area? So the significant area, and if you just look left, you can see these two candles here. Okay, they touched it. Okay, and it's 2.5 pips, that significant area. And wherever you get a significant area, such as this pivot line, price will either bounce or break. Do two things: it'll bounce or break. And more likely in this situation, it's going to bounce off it. Okay, so if you're getting excited about this, going, well, look, it's confirming that it's below the red trend line. So are we going to get in this? Well, we've only got 3 pips, and then you take into account broker spread. You're only looking at just going over break even. So this is not a trade to be getting in right now. Okay, so the other thing we want to be looking for, okay, in terms of the strategy, the wave down. We've got a wave down. What the piece are, which is red pushing down. There's a nice bit of distance between the PSAR and the candle. Okay, so that's always good. In terms of the moving averages, okay, we've got 200 at the top. Okay, we've got the 5 moving average, which is the white one here. The yellow moving average is the 13. The green moving average, which is all clustered together, is the 62. So that the moving averages are pretty much clustered together, and that's never a great indication. What is always nice is that if you're going in a downtrend, looking at taking potential sells, what you want is those moving averages to be in line. So you've got the 5, the 13, the 62, and the 200 all in that order. Okay, and that's always another additional kind of confirmation. And as well, we've got the Wadar Atar. Okay, so the Wadar Atar is this thing here, the histogram. Okay, so the histogram right now is telling us, if you can just see the crosshairs there, I won't put it on because it'll highlight this, but the pinky salmony colour, okay, indicates that it was a sell, but it's now weakening off. Darker red is showing a bit more strength, and also we're quite close to this blue area, which is the dead zone. This white line, okay, is the explosion line, but it's quite near to the dead zone. So again, there's not a huge amount of volume right now in the market. Okay, and it'd be interesting to see where this goes. Price will probably go down to the pivot area, which is going to offer resistance. Okay, then if it does then push down to the downside, the next thing we'll look at is the significant areas. So the next sort of significant area would be about here. Okay, so let's put a line on. So conservatively, we're looking at this area here, maybe a little bit Yeah, there. Okay, that's the next significant area, okay, to look at. And then from there, we've got a nice bit of clear air. Okay, so if we are going to go to the downside, okay, if we get past this area, then we can start moving down potentially to the next pivot line, okay, which gives us a bit more movement. You can see how now that the moving average are just starting to separate a bit more, which is a bit more about what we want to see. So anyway, let's have a quick look at some more pairs. Euro NZD, okay, starting to push out. So we've got clear air. Now we've got half an hour before we get the news. So if we were to put a short on this, okay, so essentially what we'd want is our stop loss. The first thing you want to be looking at is stop loss. Okay, so stop loss above the pivot line and also above the red trend line. Okay, somewhere about here is not too bad, 8.9 pips. Okay, that's all right. And we're looking for a 1 to 2 ratio. And now you can start to go, hang on a minute, that's quite a long way away. Risk to reward ratio 2. Okay, so there's your 1 to 2 ratio, which is quite a distance away. So now, are we so excited about this trade? Okay, and in order for price to get all the way down to here, we've got to have some pretty sharp moves before it gets to the news. All right, and so what I'm looking at this is, because news is like half an hour or 32 minutes away, this potentially could be a little bit of a fake out to get people into it, to get their stop losses up here, and then when it gets to the news, potentially they can just take out stop losses. The banks, the institutions can take out those stop losses and liquidate the market for themselves to push price in their direction. So even though this looks exciting, potentially it's not one you want to get in, because for me the numbers don't really work. And if you look at any other areas of interest, okay, where's the next low? Okay, the next low is quite some distance away. Look at the 15-minute time frame. This area of low was the 14th, 245, and it touched down just past where it is now. The areas of sort of significance would be where these bodies are. Okay, and that's kind of where price has just been. So, is there anything else more significant? Price, it's been a long time since price has been at that level. Long time. Okay, in terms of scalping. So we can pretty much say that this price has bottomed out. In fact, if I look at the hour, yeah, look at where we are. Look at where we are, right at the bottom of that price action. I mean, crikey, going back to July of this year. Okay, the nearest we're at, probably May. Okay, May of this year. Okay, this is May. So it's right at the bottom of where it's been for a long time. So that's kind of quite interesting. So having looked at that, are we still interested and are we still excited with the fact that this is breaking out? Well, it's still going down, look. However, we're not going to get our 1 to 2 out of that, I don't think. Not before price gets to the news, and then we can do all sorts of. The news will do all sorts of things. Makes the markets really volatile, and then you don't know what's going to happen then. So yeah, again, same sort of thing. Price is breaking out of this trend zone, this trend line. News is here at 7 o'clock. So again, we're just going to be patient and just bide our time for the news. We're not going to jump in. Same sort of thing here on the pound New Zealand. Okay, these could be just tapping into these lower lows. Okay, as we've said before, it's presented a low since May, so it may well just want to touch those. There's no imbalance. I mean, there could be imbalance from way back in May. In fact, there probably is, and it might just want to come down and take those out before price moves to the upside. What we've got here as well, we've also got some previous imbalance, so that's been mitigated, so we'll take that out. We don't need that in. So this in itself is forming imbalance as well, so price needs to come back to mitigate this area, even though it's just been formed. So let's have a quick look again. Euro odd, okay, forming a very similar pattern. Nothing really of any significance. We've got a wave now. We've got the PSAR flip. We've got the red wave. The wave is showing down. The Wadarata is salmony pink. However, if you look at that, salmony pink, the explosion line is moving away, so that's positive for us for a sell. This is the dead zone, this area here. So you can see price before was into the dead zone, okay, and then when it breaks out the dead zone, that's when I want to be considering or paying more attention for the price in our direction. Okay, but again, remember these indicators are lagging indicators, only telling you what's happening at the time. Okay, and as you can see, pink is lack of strength, it's weakening off, okay, and that's just indicated by the fact that these candles are all doji candles, or certainly the big wicks, small bodies, okay, the volume isn't there right now, but then that's just indicated by this. So again, the indicators on your chart, what they will do is they'll just give you different stacks of probability. Okay, we'll take this off as well. And all you're looking to doing when you take a trade is you're looking at those probability stacks and you want to add them up in your favor, and then you've got to sort of try and interpret what's going to happen. So as you can see from there, look, yeah, okay, possibly it could go down, but then when you look back even further, was this actually a real move, or was it a bit of a fake out to try and get people to put their stop losses up here? Okay, and certainly it's not going to go down to any significant area before the news. Okay, so if you're not quite sure what's happening, look left. Okay, look back to see what happened previously at price, and I tell you, it always corresponds. Oh, the morning coffee. Yeah, same sort of thing. Price is coming down, starting to go sideways, and you always get that when you've got high impact news on the horizon. Price will consolidate. It'll either consolidate on the run up to news, or you'll get these little fake outs on the run up to news, and then extreme volatility when the news hits. Right, nothing much happening there. Nor there. Where's that? We'll take this off for now. Obviously, it was just put on there as illustration. So all we're going to do, we're just going to bide the time, unless something significant happens. I do apologise for the yawning, but I did 6:36 in the morning. Oh yeah. this is the great thing about this strategy, is that, if your regular routine is to get up at 7:30, get in the shower, get dressed, get ready for work, have a bit of breakfast, and then go off to work, you can do a trade, okay, potentially do a 1-to-2 ratio, and be in and out the trade before your first bowl of cornflakes. If you have cornflakes, even before your first bowl of sugar-free muesli, okay, whatever you do, it's a great strategy to get in and get out and get done. And if you're doing 1-to-2 ratio every single day, if you do 2% a day on an account, okay, that adds up quickly. And yes, you are going to take losses, okay, but the important thing is that even with a poor win ratio, okay, if you're making more than you lose mathematically, you'll still be successful overall, okay. And that's something that we look at in the training. And what you don't want to be doing as well, if you're going to work, excuse me, what you don't want to be doing, you don't want to be thinking about work and then thinking, I've got a trade on, and leaving those trades open. You can leave a trade open, just set your stop loss, you take profit, off you go, forget about it, okay. But you're not going to, because if you're trading with your real money, you're not going to forget about it. Oh, it's okay, I've only got a bit of money at stake. You're going to be wondering about it, wondering what's going to happen. So if you can get a strategy like this, where you're in the trade, out the trade, done, that's it, you're going to work, you can concentrate on your work, all right. And then if you get a lunch break, if you're in that sort of situation, you can come back and use this strategy at 1 p.m, okay, and come back and see what's going on, if time allows. But 2% every single day, compare that to what the banks and the build societies give you, okay, which is what, not nowhere near that anyway. Right, Euro NZD, excuse me, you can see how it's starting to make a move to the upside. And again, if we're looking at this going, oh, there's a move there to the upside, let's have a see. So as part of this strategy, what we want is we want price to come above the green trend line for potential buys, okay. So currently what we need a wave up, okay, but currently we're in a wave down, okay. So we're not even going to consider this for a buy, okay, because we need the wave up first. So the wave up needs to be over here, okay. Green PSR, okay. What about the moving averages? Where are they? That's a good question. There we go. So we've got the 5, okay. We've got the 13, okay, which is here. And you see how it's starting to move, starting to cross over, okay. This is never a good sign, okay. You want some nice clear separation with those moving averages in order, okay. 62 is up here, and our 200, yeah, look at that, 200 is way up here, look, okay. So if we were in a position where price went through, see, look at this moving average, see how it's starting to cross, okay. So if price went up, okay, went through the 62, ended up going through the green trend line, created some clear air, then we've got a nice run where we can go to the 200 moving average, okay, as a potential take profit. So if we were to go from here to there, okay, 14 pips, okay, 14 pips, and you might say, well, look, there's all this action going on down here, why don't we get in here? Okay, there's a real easy explanation why we don't get in here, is because it doesn't form part of the strategy, okay. And another real important thing in trading is that if you break your strategy, then suddenly you start gambling, okay. Now look, we just got a wave up. So now we've got a wave up, we've got the PSR flip underneath, we've got some nice positive price action. It's currently at resistance zone. This the 62 moving average is now offering resistance, okay. Now if it pushes past there, then the trend line will then offer resistance. If it pushes through, then we're going to consider the buy. Okay, then we've got to say, okay, what about this? What about this guy? Okay, the high impact news at 7 o'clock. By the time we get price action comes up to here, we're going to be very close to the news. If indeed it does come up here, because we don't know if it does, we don't know if it will. Okay, again, we're still cautious, because this could be the banks just going, yes, come on children, get into the buy, it's okay, nothing to see. And then suddenly you get to the news and they go, ha ha, and they'll stop you out, because the banks can see your stop loss. They can see everyone's stop loss, and of course they operate with software, and that software will kick in, and it will liquidate the market, because the banks have to liquidate the market. And that's what they do. Okay, so you can see how prices just went up to that 62 moving average. Okay, it came down past the trend line. The trend line is now resistance for the price action. Price is pushing away from it, but because it's straggling that line, okay, there's no clear air, it's still offering resistance. Okay, and price may well want to come back. Okay, once the price breaks out and goes across and separates from the trend line, okay, with clear air, okay, and also the pivot line, that's when you can say, okay, now it's free to do its own thing. Okay, so we're currently a minute left on this time frame, so this price could do anything. Right, we'll come back to that one. So Euro NZD, GBP AUD. Again, nothing really happening. Nothing of any significance anyway. You can see the cluster of moving averages on here. Very kind of busy. And again, news here. So we'll just sit on the hands. GBP NZD, it's a similar situation. Here we're back into this no man's land. Okay, just up here. So again, nothing really happening, and again, high impact news. High impact news is the trap waiting to grab everyone's money. So again, just sit on your hands, don't do anything. So the Euro NZD we were looking at previously. So you can see now price has broken away from the trend line. It's also broken away from the pivot line. Okay, so the pivot line has now gone from resistance above it to support when it's below it. Okay, so the floor becomes a ceiling. All right, so as we're going to start moving down, then we've got to consider, okay, if price is moving down, where is it going to go down to? And it's got to break past the moving averages, okay, and moving down to these lower lows. Okay, so where does price go? Okay, we've got 8 pips down to there. So if you watch price action now, the pivot is now acting as resistance to here, to price going up, support to the price going down. So is it going to break through? And again, when you see price doing this, let's make this a little bit bigger so you can see it. When you see price respecting certain lines that you've got on your chart, it gives you confidence. It gives you confidence knowing that, you know, that line is there for a reason. It's not just to make your chart to look pretty. Okay, the line is there for a reason, and you can start to look at those reasons and start to interpret, you know, what is happening in the markets based on your diagrams and your indicators. And then what you want to do is just minimize the amount of indicators. So the less indicators that you've got, I always say, the better trader you will become. But you need the indicators on when you're first learning. And what I always find is that a lot of beginners, they will put too many indicators on, because they need too many confirmations, because they don't yet have the confidence to really understand what's going on. And that's the main thing, is what is the correlation between price action? Why is price doing that? Why does price go up and down during news? What is the correlation between the pound and the euro? Okay, so if we look at this, okay, the euro New Zealand, okay, this price is, we're talking about the euro because the euro is the primary pair on this. Okay, so if we have news that makes the New Zealand dollar stronger, okay, what's going to happen to this price? Is it going to go up or down? Okay, it's going to go down. Okay, because it's the euro versus the New Zealand dollar. Okay, imagine it's like a Rocky film. Okay, euro versus New Zealand. Okay, so if the New Zealand gets strong, the euro gets weak. Okay, if the euro gets strong, then the New Zealand dollar gets weak. Okay, so euro gets strong, we go up. Okay, the New Zealand dollar gets strong, the euro goes down. Okay, that's really it. Or it's one aspect of it. Okay, so just look at that, look at the correlation, and look at the kind of the relationships of what's happening. And the more you understand about that sort of thing, then, like I said, the better trader you'll become, and the more you'll be able to understand the relationships and the correlation of what's happening. And how do you do that? Repetition, practice, get onto the charts every single day, and forget, as I always say, forget about making money. Okay, and it might sound counterintuitive. Okay, I've been doing this for 5 years now. I've been an online business owner for, I don't know, 16 years. Okay, and the first thing you look at in business are your numbers. Where's my take profits? How do I make money at this? Okay, and if you've got to approach the charts from a different perspective. The first thing you want to be doing is looking at learning your trade. Okay, and the first thing we look at when it comes to trading is protecting your account. Okay, and the first thing we want to be doing when we're looking at a trade is, where is my stop loss? Where could price go, and how do I protect my account in the right way? And with some strategies, you want to be risking 0.5% of your account. Okay, which means your stop loss will be tighter. Okay, with this we go 1%. Okay, and we're always looking for a 1-to-2 ratio. So if you make 2% on your account, fantastic. If you lose 1% on your account, doesn't really matter. It's only 1% of your account. Okay, and what you've got to consider is, how many trades do we actually lose? And you will lose trades, no doubt about that. But if you win more trades than you lose, bearing in mind we've got a 2-to-1 ratio, then you're going to be better off all round. And again, it just comes down to very simple mathematics and very sort of basic metrics. Look at your metrics and work it out from a mathematical and a logical point of view. And when you do that, the money comes. Okay, but when people blow accounts because either they're just getting involved and they don't really understand what's happening, they put the wrong numbers in, or emotions take over and people get too greedy. Okay, and they go, well, I took 2% in this, so I'm going to take 3%, so I'm going to stay in a bit longer. Oh, it's gone back to break even. Oh, it's hit my stop loss. Down. And again, once you understand the strategy, you'll understand what you can and can't do. And the only time I've ever lost is when I've come outside of the strategy, where you try to outwit the market. Look, market didn't know that. Oh, it's just stopped me out. Okay, so never do that. Never chase trades. Never get emotionally involved. So this one, no man's land. Nothing really happening. So we've got 10 minutes to the news, and then we'll see what's going to happen to the news. And sometimes, like I said, the news can kick in, price can go all over the place, and then it'll settle down. And then after that period of settling down, then you can kind of reassess and go, okay, where are we? what kind of trades can we take? Euro odd, again nothing happening. Euro NZD, same situation, nothing really happening. In fact, price is pretty much in the same. In fact, we just see if we can put that in a similar position. There we go. Look, very similar patterns. GBP AUD, very similar, and GBP NZD, very similar indeed. So we'll get into a scenario where we get to the news and then the price, the whole thing goes volatile, which it will. Then what do we do? Okay, if we see a potential trade, okay, the idea is that we don't get into two pairs of the same currency. Okay, so if we were to get into GBP NZD, okay, would we then get into GBP AUD? And the answer is, the best practice is to say no. Okay, because if GBP weakens off and we lose the trade, the chances are, if we're in a similar trade for this one, then we're going to lose two trades. Okay, so we've lost 2%. Okay, if we win, then yeah, okay, we can win potentially 4% on a 1-to-2 ratio. Okay, but the best practice when you're first getting going is to go into one pair. Just trade one pair, okay, of the same currency. Don't get into two. Okay, so you could get into GBP NZD and maybe Euro odd. Okay, they're two opposing pairs. But would you want to get into GBP NZD and Euro NZD? And no, because if NZD does whatever. So again, it's all about mitigating your losses, practicing good account management. And you will see slightly more experienced traders getting into different trades, you know, the same pairs, okay, because they understand a bit more price action. And also, when you get into one trade, an active trade, when you're scalping, it's okay, you can manage it, you can look at your MT4, you can find out where things are going, you can cash out if you need to, okay, make those quick changes if you need to, okay, but when you're doing 2 trades, 3 trades at the same time, then it becomes an entirely different ball game to manage. So again, you want to be a bit more, just go through the trades, and you know, if you're getting going, spend time on a demo account, spend time working out your stop losses, and then when you realize how quick you need to be with the maths, then you realize, okay, I need some sort of manager, an MT4, MT5 manager on there. Okay, and again, we've got that access to those in our training group. Okay, and they're a lot easier to use, a lot more automated, and it could just save you a bit of computing power. Okay. There are lots of trade managers available. Okay, some are better than others. If you look at your own trade manager, then go and find something that's been tried and tested. And there are lots of trade managers out there. Okay, but again, you get a trade manager on your account, and it will save you a lot of. And the thing is as well, if you look at a trade, okay, and let's say we put let's say we're going to go short on this. Okay, so we work out our take profit, our stop loss rather. We'll work out our ratio. We look at this. We look at, it's giving us the numbers on here. Okay, so that's from there. Look, so 202,679 stop loss, and 202,512 take profit. We then get those numbers. We then put them on MT4. We then punch them all in. It takes ages. Okay, it used to take me ages. Okay, to do that. And by the time you put all your numbers in, you're not even dealing with the trade that is relevant anymore, because price has moved. Okay, so you're already in stock. You're already in. You're too late. Okay, so this is why you want a trade manager. because you can get in there, you can just look at it. Okay, yeah, you punch in your numbers, your 1 to 2 ratio, and you click go. Okay, and it'll do it for you. However, you need to do it on demo, because you need to know that Trade Manager is working properly, and you need to know that you are confident with your trades using that approach. Okay. So Euro AUD, nothing really happening. Euro NZD, same sort of thing, waiting for the news. GBP AUD, and GBP NZD, or Pound New Zealand. So what have we got? 3 minutes before the news kicks in, 6:57. It was 5 days before Christmas, and he was trading the markets. And that's something else you want to consider as well, is that as we approach the festive season, there's going to be less and less volume in the markets. So just bear that in mind as well. In that, you know, if you trade this regularly, and you're thinking, well, the markets aren't quite reacting in the same way, okay, then it's because we're approaching festive. Well, we are into festive season, okay, and a lot of people have gone home for the holidays. So bear that in mind as well. So what are we going to do when this news kicks in? What are we going to do? What would you do? Would you put a trade in either direction? Okay, some people have done that before. They've put trades in both directions to take advantage of any major pushes, and also they instigate a trade manager to do that for them. Okay, a bit more sophisticated, and you know, potentially you could do that. But again, if you're just learning, just getting started, what we do is we stay out of all this volatility, because the news is designed to stop you out. It's designed to take your money away from you, and we don't want that. We don't want that, do we? Right, Euro NZD, poised, ready for the news. So I think what we'll do, we'll go on to, what have we got? We'll have a look at GBP AUD when the news kicks in. We'll see what's going to happen. Right, so let's keep this on and see what happens at the actual time. Okay, so we can see how we're getting this kind of fake out move. So yesterday the price just continued to go down when the news kicked in. So watch this. And it did the same thing. Price continued to go down. Okay, look at that. That's ridiculous. So imagine if you were in a sell now, okay, you'd be cashing in, going, it's going to be an early Christmas. Okay, imagine if you were in a buy. Okay, you'd have been taken to stop loss, that's all. Okay, and the volume on this, 75 pips. An instant 75 pips. When you consider it takes $10 million to move 1 pip, you can imagine what's just been dumped into the markets from there. Alright, so let's have a look around, see what's going on. So, Euro Australian dollar, the Euro NZD, that's a huge move there. GBP AUD, a huge move. GBP NZD, correct, that's off the charts. $82 pips. So getting on for $1 billion. Well, it's over $1 billion, isn't it? Depending on how you work it out. If you work it out as 100 million as $1 billion, and it takes $10 million to move 1 pip, and that's 83 pips. It's a lot of volume. So what do? Okay, we sit and wait. Okay, as I always say, it's like somebody setting fire with a flamethrower to a room. Okay, you're not going to jump in. You're going to try and get in the room, try and recover your tilly. You're just going to wait until the flames die down and then see what's happened afterwards. So the next significant area for this one, crikey, let's go to the hour time frame. Now this is the hourly time frame. Let's have a mooch at the daily. So the last time price was here, okay, was back in May. Okay, on the daily, as you can see on the daily, there's lots of imbalance up here. Okay. Just a huge move. Okay. You see how price is recovering on the euro odd. Okay. So price is starting to recover, and that sometimes when the price recovers, that's the buoyancy sort of taking back. Okay. That's the flames dying down in the room, and we're not quite able to go in yet to see what's happening, but you know, it's readdressing. But still nothing really for us. Okay, we're below the red trend line, which is great. Okay, we're below the green trend line. Okay, but if we're going to go for a sell, our next significant area is the pivot line. We've got the PSAR flip, we've got the wave down. Okay, but we've still got resistance here. And remember, this low here is the lower low since May. Okay. So is price want to go is it going to want to go further down, or is it going to sort of want to come back up? And if it does want to come back up, then we're going to stay on the charts a bit longer. So then we're going to go up to these levels here. Okay, going through this imbalance, maybe even touching this imbalance here. So again, that's something you've got to look out for. So I can't really see price going any further than this area here. Okay. So again, so price starting to kind of readjust, but this is still being quite affected by the manipulation. As you can see, price is kind of jumping around. Okay, and it's a 2-minute time frame, so price does jump around a bit quicker. Okay, but still quite a lot of volatility going on. Euro NZD, GBP AUD, same sort of thing. Price is quite volatile, so there's no actual stability or structure to what's happening because we've just been the markets have just been manipulated, and quite significantly as well. GBP NZD, similar sort of thing. Well, we've been on an hour, so we'll stay on a bit longer just to see what's going to go on. But you see, look at what trading opportunities have we got here? Nothing really. It's like, shall I get in? Shall I not? No, I won't get in because there's no volume. Okay. And even if you were to get into this based on the strategy, so going below the red trend line, okay, you wouldn't get in till probably about here. Okay. And even then, if you want to get into here, you've only got what, 7 pips maximum, okay, which isn't enough when you take into consideration broker spread. So, you know, would you go in for a few little pips and maybe risk going into drawdown and losing the trade? No. Always better to be out of trade, wishing you were in rather than the other way around. Okay, or trying to, and trading isn't just about taking trades. It's not just about taking any trade. This is what I learned years ago. It's not just about taking any trade. It's about taking great trades, and about knowing that your strategy has been fulfilled, and having the confidence in your ability to be patient, to wait for those great trades, and come back another day, or come back tomorrow, or come back later in the session at the 1 o'clock. Okay. Crikey, look at this. Are we going to go and see a move to this pivot? That's interesting. So because the price has been manipulated, what we end up with, we can look at this and go, okay, for short position, okay, and we're going to short from where price is now, okay. Question, where do we put our stop loss? Okay, well, ideally you'd want your stop loss just above this pivot, okay, 11.4 pips. Then we look at take profit, 1 to 2. That brings us above the pivot line, okay. So would that be a good trade, or would that be a trade based on the price is going down, I don't want to miss out? And what the answer is, we're still suffering the 7 o'clock manipulation. So the price isn't really an accurate representation of what's happening in the market. Okay, it's just what's happening as a result of that manipulation. So how can we react accordingly to something that is false? And that's really what we're looking at. Okay. The next significant area is here, because these lows are the lows from May. So let's have a look at the hourly. Yeah, it's the lowest it's been since May. So is there a chance it may well come down? Who knows? Okay, but right now we're going to stay out. We're just going to stay out of it. Okay. There we go. Good. Euro NZD. Still massive pushes to the downside. And again, if we look at the strategy, we're below a trend line. We've got the wave down. We've got the PSAR flip. Look at the distance between the PSAR and the body of the candle. Okay, big lot of distance. In terms of the moving averages, we've got them all in order. Look, nice. We've got the 5. This is the white one. Okay, we've got the 13, which is the yellow one. We've got the 62, which is there, and the 200 all the way up there. Okay, so that's what you want. You want that nice bit of separation on the EMAs. and you want them in order, okay, which is nice. We've got the wave down on here, which telling us if we are in a sell trade, this would be a confirmation that we're in the right trade and we should stay in, okay, under normal circumstances. These aren't normal circumstances, this is manipulation. And we've got the Wadarata. Okay, the Wadarata here is dark red, okay. So the explosion line is moving away from the dead zone, so again positive. It starts to go salmony pink, okay, and also the explosion line starts to level off a little bit. But the indications for this are that, you know, or certainly here, nice strong push for the downside. However, you got to remember that this is manipulation, and these aren't normal circumstances. This is just a manipulated illusion, if you like, of what price is doing, because it's still recovering from this massive push. So if you think round here, there was hardly any volume, okay, and then suddenly, you know, close to, you know, $1 billion was put in instantly at 7 o'clock, and the market is still recovering from that. Okay, you can imagine like a lottery winner. This is the Euro NZD, the new money lottery winner, and currently is, you know, looking to spend his money on the biggest telly he can find, and that's really what we've got here. Okay, and it kind of doesn't really bear any resemblance on the Euro New Zealand dollar, as it, you know, in the traditional sense. So the Wadarata, as you can see, the volume for the sellers is getting less and less, as indicated by this candle going green. So again, what do? We're just going to wait. Maybe even come back tomorrow, or come back at 1 o'clock and just see what's been going on. Okay, your GBP AUD still down for the sell, but again, see how it came down to the pivot line. Obviously this was manipulation, pushed it all the way past, went to the pivot line. Okay, it now used the pivot line as resistance, and then as it pushes through, this pivot line then becomes support for this price action here. Okay, so potentially this could go further down and further down to this pivot line here. Okay, so from there to there, we're currently looking at 54 pips. So again, this potentially could be clear air depending on price action. Okay, so it could be a nice move. It could just be the remnants of manipulation. Let's have a look at the weekly. So on the weekly, this is the weekly, okay, and you can see how, if you can see that the price has continued to come to the downside. There we go. So red candles all the way down. Okay. Next area of kind of interest would be maybe about there. And then the next area of interest, I would say, that's more accurate. So we're tapping there, we're tapping there, tapping all these. That's a bit more interesting. And then from there, we're looking at here. There. Okay. So let's look at these two areas. Okay. What else have we got? We've got anything more? No, that's it. Okay, so let's go on to the back on the 2 minute. So if you were to come down on the 2 minutes, based on recent price action, this area here is that area of interest that we just looked at, okay, because it taps it through, taps it a number of different times. In fact, what was the date on that weekly? So from here, we're going back to April. That's better. Okay, back to April. Monday the 3rd of April 2023, and then we've got June. Okay, that's a bit more accurate. And then from here, got these. We'll take that to there. Okay, back on my 2 minutes. So the reason you do that is if we're looking at potentially going for a sell on this, then the next area of interest would be down to this area of interest here, or a take profit will be there, which takes us to, from where price is right now, 34 pips. Okay, let's just put that on as a matter of interest. So if we shorted the position, okay, so again, where is our stop loss going to be? So on my 2 minute time frame, is 24 pips stop loss a good stop loss or a bad one? Okay, takes us above the pivot, which takes us into that safety area, so price needs to push past. Okay, but it's too much. It's too much for us. Okay, because if you want a 1 to 2 ratio with this, it takes you past there, and it also takes you past the next pivot line, which is not intelligent. Okay, ideally this is our first area you want to be looking at, and you want to be. So what we could do as part of this strategy, okay, we've got this line which represents this engulfing candle, and potentially we could take it just above that. Okay, so it's still 12 pips. Okay, but a 1 to 2 ratio now comes up to there, somewhere about there, and that's more of an intelligent take profit level. Okay, because it's above our area of interest where price may want to come to, and also the pivot line, which again price may want to come to. So we'll leave this on here and just see where it goes. And this is the sort of thing that you want to be doing when you're taking trades. Okay, is number 1, manage an account. Okay, number 2, where has price been in the past? So look left, and then make an assessment based on that, and also look at 1 to 2. So, is there enough legs in the trade to go for a 1 to 2? And with this setup, there is. Okay, because we're above these areas. Okay, if price was all the way down here, we go, okay, look, it's a 1 to 2. Okay, it's pretty unrealistic. Okay, but if we do a 1 to 2 on this, okay, just bear in mind that we're still suffering the effects of price manipulation. I'm out of coffee, so let's leave this on. We'll just see where price is going to go to, and again, this stop loss is pretty tight. But again, it's just an illustration as to if you were to take a trade, what are the considerations when you're taking a trade? Okay, what's the thought process of taking a trade? So let's just see if that engulfing candle area gives us any kind of resistance. It may or may not. You may just want to break all the way through and just take us out. So he's offering a tiny bit of resistance, as you can see. But again, the best place to put a stop loss, if we're going to do this properly, is up here. Okay, but it's too far away. So we're currently a minute left on this time frame. And it looks like price wants to retrace, go back up. And sometimes what you find is that if you go, well, no, price is telling me it wants to go back down again, okay, then what can happen is that the price can go back up, okay, test an area, and then come all the way back down again, okay. And this is why, you know, stop losses like this, they're not really any good, because it's not really a significant area. We just put it there because it's tight, okay, and because we can get a 1 to 2 down here, okay. Ideally you want it up there, okay, but then you 1 to 2 ends up further down. So again, if we're in this, we've been taken out, but again, it's a tight stop loss. We'll just see what happens, just see where price wants to go. We're 6 seconds away from this timeline, from this time frame. Okay, so we'll see what's going on with this. And this is a good lesson for, you know, when you set your stop loss, is don't have the optimism bias, and don't try and get a 1 to 2 ratio by cutting it too fine, okay. Well, you know, if we put our stop loss up here, okay, then we'll be going, yeah, it's fine, it's okay. And look what's happened, it's just wicked us, just like half a pip, okay, out. And there's nothing more frustrating when your optimism bias kicks in and you lose out by fractions, okay, nothing more frustrating. So again, look on the pessimistic side, because you'll win more trades when you consider, you know, the reasons to stay out of a trade rather than why you should get in, okay. So we'll come back to this. So a quick look around. So GBP NZD, okay, still it's actually doing the same thing as the previous one, okay. So we're in this trade around here, aren't we? So it could well go, it could go to the downside, but I'm not interested right now, because, you know, the markets are not reacting in the right way. Massive move, this, huge. Okay, Euro odd, just again going sideways. Euro NZD, very similar. We're still, what are we in now? We're in a wave down. Yeah, we're in a wave down. Look, wave down. Okay, all the way down here. P-TAR's gone green, the volume's gone out of the volatile, so again we just buy the time. So that's still coming back down on our GBP odd, GBP NZD. It's going down, and what you could do again, you know, if you were to consider this, go onto a higher time frame, go back to, you know, wherever these were lowest, which was like April, May time. Plot your areas of interest, and then come back and see what price is going to do. And this may well go down to the lower lows here. Okay, sorry, the pivots here, and you might end up with a nice trade. But for the purposes of our session, it's been a long one, hour and 24. We'll just see what's going to happen with this. So if we're still in this, and it just wicked us out there, okay, because the stop loss was too tight, but we'll be in some minor profits right now. We'll be 9 pips up. If I was to stay on this, so I'm just keen to see where it's going to go, because, you know, this is quite an area of interest, and I want to see if it's going to touch it or not. And if it's going to go down, it's going to go down there within the next few minutes. So we'll just see. If we don't get there, then what I'll do is I'll do a recap on the next session. I'll do a session for you tomorrow. I know it's Christmas, but hey, The markets don't really wait for anyone. And the other thing is, if you've got some time off at Christmas, then it's good to get on the charts and just do some back testing. Okay, really interesting, really valuable to go and do back testing and get your notepads out and start documenting the back testing and what happened. And what you'll find is that, you know, if you back test like 50 trades, okay, I guarantee that you'll find a pattern. You'll find some commonality in there. All right, and that's what trading's about: finding commonality, finding patterns, and understanding the relationships. And just do it. Just do it. You know. When it comes to stop losses, okay, if you look at this, we took it on the most optimistic level, this area, this engulfing candle, and we put it kind of pretty much on it, okay. Now, whenever you're putting a stop loss on, okay, use your optimism bias, sorry, get rid of your optimism bias, go on the pessimistic side and take it above the areas of interest, okay. So, an area of a significant interest is the pivot. Okay, so again, take it above the pivot. Okay, maybe even take it to this area here, and if it works for you. And the same with when it comes to take profits. Okay, don't take profit on the area of interest. Take profit on the area just above it. Okay, pivot lines there. Okay, take profit above it. Okay, so if we're looking at like take profit 2, you would take it above it. Okay, and so on and so forth. And that way, you're increasing your chances of succeeding with your trade. You know, sometimes when you're watching trades like this, it's like watching paint dry. What's going to happen? No, next candle's formed. It's just starting to go sideways, and you can go sideways for a long time, but yeah, I'll tell you what I'll do. I'm going to put an alert on this. There we go. GBP AUD is crossing the horizontal array, so when that alarm goes off, then I know it's hit that significant area. So if I'm not on the charts, and I usually have the charts open. I don't obviously sit on the charts. I'll have the charts open until maybe on the early one, 10, 11 o'clock. Sometimes this strategy can be relevant until the early afternoon, or certainly late morning, and then 1 o'clock we're then trading the other pairs. We're trading the American pairs for the start of the New York session, so we're looking at those as well, so it's all good. Right, okay, we'll let that go, let that simmer, see what it does, and we'll come back a bit later. Anyway, if you got some value from this video, I hope you do. I hope you get some training, some value from these trainings. If you do, and this is the first time you visit the channel, hit that subscribe button. Really appreciate that. And if you, there we go, look, it's just taken. It's just if we're in this trade, it's just taken us to that again. Look at that. How it's just taken us into that take profit level, above the pivot. Sorry, above the area of interest, and just touched on there. Okay, so in this trade, had we gone for a slightly more intelligent, shall we say, stop loss, then we could have made some money at this. Okay, but it stopped us out up here. Okay, but again, looking at the areas of take profit, you know, be conservative, be pessimistic. It's not going to go down to this area here. Okay, it may well do eventually, but right now, okay, it's taken us down to there. Anyway, as I was saying, If this is the first time you visit the channel, hit that subscribe button. Really appreciate that. And if you got some value from this or any of the videos on this channel, give us a thumbs up. And I really appreciate the support we get on the channel as well. Okay, any questions that you've got my details on there. You've got my text number. Remember, that's a text number. I don't answer calls, okay, although a lot of people do call, okay, and it is a phone, but I only answer text messages on that one. If you want to send me an email, my details are below in the description, and just reach out, any questions that you've got. All right, I'm John McLaughlin, and we'll talk soon. Bye for now.